Welcome to the Fear and Greed Afternoon Report for Monday, the 14th of November, 2022. I'm Michael Thompson. Every afternoon, we've got the 5 stories that happened today that you need to know about, so let's jump into it. Story number 1, it's all about China really today on the ASX, with iron ore miners and materials companies rising in a market that was otherwise flat. The ASX ended all but unchanged after early gains disappeared in afternoon trading. The S&P ASX 200 closed at 7,146 points, a decline of about 0.2%. The resources sector led the way higher. That was on optimism that policy changes announced in China's real estate sector might boost demand for Australian commodities like iron ore. Fortescue Metals Group added 10%, South32 jumped nearly 6%, BHP added 4.6%, and Champion Iron rose 13%. Among other large caps, Telstra fell 3.5%, Cochlear dropped just over 4%, and QBE Insurance Group fell 4%. On commodity markets, the oil and metals prices rose, while the Aussie dollar slipped slightly to trade at around 66.8 US cents. On to story number 2 now, and travel agent Flight Centre has warned that cuts to airline commissions would slice 1% from its profit margins. Flight Centre told its AGM, which was held today, that its underlying operating earnings would hit between $70 million and $90 million for the first 6 months of this financial year. That's better, substantially better than the $184 million operating loss the same time last year. Chief Executive Graham Turner told shareholders this year will be a year of gradual recovery for the industry, adding that there was considerable pent-up demand not yet fully translating to bookings. Shareholders were disappointed that the recovery is slower than they expected, and Flight Centre shares fell 3% today. On to story number 3, and Elders announced the departure of longtime Chief Executive Mark Allison, sending its share price tumbling 23% despite posting a 9% rise in annual net profit. Elders is benefiting from strong margins in fertiliser, pesticides and weed control, but its share price fell heavily on fears that the good run of profit growth may be over. Allison says his sense is that, quote, the outlook is positive, but the market reaction shows shareholders are a little nervous about wet weather in Eastern Australia, as well as the longer-term outlook for cattle and sheep prices. Story number 4, as I mentioned earlier, China is relaxing restrictions on the property industry in another sign that President Xi Jinping is concerned about the state of the country's ailing economy. 16 policy measures have been announced, from loosening deposit requirements to helping property developers with liquidity. The measures have been described as massive in scale. The easing of the real estate restrictions comes just weeks after President Xi secured another 5 years in power and just days after he eased some COVID restrictions. The policy shifts should help China's growth outlook and will likely see the recent rally in China stocks continue. And finally, story number 5, US Federal Reserve Governor Christopher Waller says the pace of interest rate rises is less important than the level they end up at, telling everybody to take a deep breath after the better-than-expected inflation figures in the US last week. Waller is a voting member of the Federal Open Market Committee that sets interest rates, and said the US inflation was just one data point, and while it's positive, interest rates were still lower than they need to be. Waller says the worst thing you can do is stop, and that inflation was, quote, enormous. That's it for the afternoon report for Monday, the 14th of November, 2022. Adam Lang and I will be back tomorrow morning for the Tuesday edition of Fear and Greed. I'm Michael Thompson. Enjoy your evening.